Hi there, I'm Tyler Ballhorn, founder of Stockscores.com. In this video, I'm going to give you an overview of how the Stockscores Active Live service works. First of all, what is it? It's a real-time trading idea generation system. You watch me and my computers running my strategy algorithms. You watch my screen via webinar and you hear my voice. You also hear trading ideas provided by me and my computer-driven trade alerts. That'll make a little more sense as we go into this. Now, what is the schedule? Well, we're going to go through each phase of these, but basically from 9:30 for about 10 minutes, we work on my worm strategy. We then review the previous day's trades. And about 9:50, this is all Eastern time, we begin to build the watch list, something I do on my other screen. I then give you the watch list that you see on your screen. I copy and paste that list into a chat window so that you can copy it and drop it into your trading platform. And that's all focused on the intraday pullback strategy. At 10:05, we begin to do some market scanning for swing trades. And at 10:14, the computer begins to monitor for intraday pullbacks. That basically runs all trading day. And then at 3:30, I come back on and do my scanning for the action break strategy, which looks for swing and position trade opportunities. All right, so let's first begin by discussing the worm strategy process at 9:30. For this particular strategy, I'm looking for my action candles to break through resistance. And I have a process that I have to do very, very quickly to try and catch those as they happen. And that's basically looking for them every 2 minutes for the first 5 to 10 minutes or so. It's a very time-sensitive strategy. I have to move very quickly, efficiently, and therefore I don't have time to actually type out the symbols, so you will have to listen to my voice, and I will call out the symbols of those that I think look good. And so, for example, I might say Microsoft, and if it's a symbol that maybe people don't know, I'll also try to spell out the letters so that you don't miss out on it. So I might say, Mike, Sierra, Foxtrot, Tango, the symbol for Microsoft. And maybe a quick comment. And each day we get between, say, 3 and 10 worms. It's hard to catch them all, so I try to prioritize, looking for the best ones first. And this one, we're just trying to catch those stocks that are going to make big moves through the rest of the day. Try to catch them as early as possible before the rest of the market catches on to them. Now, at 9:40, I have a little bit of time before we need to build our watch list. And so at that time, I will review the previous day's trades. We'll go through the worms, the intraday pullbacks, and I'll show you a spreadsheet where you can compare what you did with what you should have done if you were perfect. What were the eligible candidates using different thresholds for my indicators? And then from that, you can decide if you beat what was ideal or if you underperformed it. So this is how that spreadsheet looks. I've got a lot of data on here, and we'll do some what-if analysis by punching in different values and looking for what's working the best in terms of maximizing the average profit per trade, not only for the past day, but more importantly for the past month, for the past number of months. Because we don't want to over-optimize for what happened yesterday. We really want to consider what was the best approach to the market for different values of my indicators over an extended period of time, over a large data set. Once in a while, we'll look at the equity curve to get a sense of how a particular strategy is doing over time. So here you can see an equity curve for my intraday pullback strategy. And ideally, you want this going up from left to right in a fairly orderly fashion, which is what this one is doing. And it demonstrates that for that particular time frame, that strategy has generated almost 300 RR for what is roughly a 3-month period, 2.5 months. Now the schedule then goes to the process where I build the watch list. I do this on my other computer because I have to do it again fairly quickly and efficiently. So I'm building the watch list that you are then going to monitor, or my computer is going to monitor, and you ultimately as well, for the intraday pullback strategy. This is of course a strategy I teach in the Stockscores Active Trader course. So I complete this process on my other computer. I then drop the list into the screen that you see, and I will share with you the list. We narrow it down, and ultimately what we want to do is have the computer monitor for strategy alerts. Now this is a little look at what that screen looks like. It's got a number of different windows. You can see some charts over on the right. In the middle is our watch list, and on the left are the open trades that have triggered so far. Now, to just break this down, this is, I guess, the important one, because this is our watch list. And there's a few things on here that I'll explain. First of all, we have the symbol. These are the stocks that I'm monitoring. At the top are the stocks that are buy candidates. At the bottom are stocks that are short sell candidates. You can see last price, net percent change, and net percent change from open. This particular column shows the number of trades and whether they are on pace to hit our expected number of trade threshold. So for example, for buy candidates, I want a stock to trade at least 10,000 times a day. If a stock is not going to hit that 10,000 trade threshold, this will actually be colored red or blue. If it's close to the threshold, it'll be blue. If it's beneath the threshold, it'll be red. And that's a warning sign that it's not liquid enough for that strategy. The next column here is score, and you can see I've got a bunch of zeros in there. During the day, I will put in a score for that. And this is simply assessing whether the stock is above the trend line on the daily chart or below, and that's for longs. For shorts, it would need to be below the trend line or above. If you see a 1 in this column, that means it is a higher quality candidate. All right? So if it's a 0, it means it's below resistance for a buy or above support for a short. If it has a 1 in this column, it means it is above resistance, doesn't have to worry about resistance, and that is better. Now, a little caveat. I put these scores on when I build the list. So in the first 45 minutes of the trading day is when I build the list, and I put the score in at that time. It is possible that the stock could be above resistance at the time I build the list, but later in the day drop below resistance. So you do want to pay attention when you look at the charts of the stock that maybe triggers an alert. You want to make sure it's actually above some resistance on the daily chart, because I don't update these scores throughout the day. I do it once in the morning. It's up to you then to just make sure that it is still above resistance if you want to maximize the quality. And if you do this, if you look for the stocks, for example, for buys that are above resistance, just the quality is better and they tend to earn better returns. Now the next column here is either going to have a 0, a 1, or a 2. A 0 means it is not above resistance on the 13-minute chart, so it's really low quality. And of course for shorts, it is not below support on the 13-minute chart. And generally, we actually throw out the zeros. Now then you have 1s and 2s. A stock will have a 1 if its abnormality is not above our threshold of 1.00, so it's not very abnormal, or if its liquidity is not above our threshold. So if you see a 1 in this column, what it means is that it's just a little bit lower quality. And what's good about this particular column is it updates dynamically. So it's not my judgment, it's an algorithm that's triggering that. The ideal situation will be when you have a 1 in the score column and a 2 in this IPB score column, adding up to a 3. Those are the best candidates. They have abnormality, they have liquidity, and they are either through resistance for buys or below support for shorts. Now the last thing I want to highlight here is this column. This is where you will see the word IPB long or IPB short. It's giving you a heads up that that particular stock may soon trigger a trade alert. It doesn't mean it will, it's just giving you a heads up before the bar closes, before the 2-minute candle closes, that it may trigger an alert based on the rules of the intraday pullback strategy. It's a way to sort of get ready for a trade, to pull up the symbol when you see IPB long or IPB short in that particular field on that radar screen. And so if you see IPB long or IPB short, call up that symbol, assess whether it looks like it's going to trigger so that you're ready when you get an official trade alert announcement, and that's what you'll hear the computer say, strategy alert. That's when you know the trade is valid, but you should have a little bit of time to get ready for that. All right. Finally, this window demonstrates just our current open positions. It'll show the entry signal time. So for example, on this particular day, DCIX triggered an entry signal at 10:28, It was long 250 shares. Now, what does that mean? That is for $100 of risk. So if you were to take $100 of risk, that is the position size that you should take. Now, that's not assuming slippage or whether you get in too late. That's based on the ideal. If you bought it at the strategy price of $4.74, go long 250 shares. If you were to get stopped out at a -1 RR, your loss should be somewhere around $100. Now, you may say, well, I want to take $400 worth of risk. Well, then you have to multiply that position size by 4, because this is based on $100 of risk. If you want to take $1,000 of risk, multiply this position size by 10. All right, hopefully that makes some sense. This finally is your current profitability for $100 of risk. So when you see a number like this, which was a great trade, 3,440, divide that by 100 and you have 34.4. That is the return on risk, the reward for risk ratio for $100 of risk. All right. So just to summarize then, 3440 means up 34 RR. This means up 0.26 RR. This means down 0.37 RR. This means up 1.9 RR. You just take the dollar value, divide by 100. Finally, you have your total profit and loss for all of these positions combined. And on this particular day, with these 5 positions, it was up 35 RR, or $3,531.60. That, again, hypothetically, ideally, based on the computer algorithm, you may be better than that, you may be worse than that, depending on where you got filled, which trades you took, that sort of thing. So I'll just show you a little video of how all this runs. If I can get it to run, maybe not. Oh, this is actually just an image of the whole package put together. So again, we've got our chart over here. We have got, this is the 2-minute chart, which would show the entry point. Here we've got a 13-minute chart, a daily chart, our watch list overall, and then our current profitability or loss on individual positions. Finally, this little window down in the left shows the threshold number of trades. That particular stock has to trade at least 6,647 times as of right now to get to our threshold of 10,000 trades a day. To get to 15,000 trades a day at this particular time, it would have to have traded 9,970. All right, so here is the video running. You can see that there's lots of blinking lights. People always ask me, why do these blink yellow? All that means is that there is a trade going through at that moment. There is, if you watch the number of trades right here, you can see the number of trades growing every time this blinks yellow. Okay, that just means that there's an actual trade going through at that moment. I can click on one of these symbols and change the charts that you see. You may not see me change them at all, because during the trading day, I just let the algo run. I really only pull up charts when I want to talk about something specifically, or I want to highlight a chart that I think is worth looking at, or that sort of thing. Otherwise, I don't really use those charts. You won't see them change a lot. Now notice here we've got these IPB short. So again, that's just giving you that heads up that that stock may trigger an alert when that 2-minute bar closes. It doesn't mean it will, it means it might. So you want to get ready, look at the chart, see if it's going to be something you want to look at. When the algorithm actually identifies the trade, you will hear the words strategy alert. And you want to keep your volume up on your computer to hear that. All right, moving along with our schedule, 10:05, I do the swing trade market scanning, where I run a couple of quick scans on Stockscores to look for some swing trades, sometimes position trades. Also want to make sure we haven't missed out anything for our day trading watch list. 10:14, the computer starts monitoring for intraday pullbacks. Why 10:14? I just find that if you do it too early, you get some bad signals, and much later you miss some good ones. So 10:14 I find is a sweet spot when we get some pretty effective entry signals from that algorithmic trading engine. I let the computer do it because it doesn't miss things. I used to do this all manually, but I miss trades. I'm a human. I'm slow compared to a computer. So we let the computer do the work because it just doesn't miss the alerts. And there's no emotion in it. It's just the machine spits out the alerts based on the math. And that is really the most reliable. Again, what you want to do is be listening for those alerts. And when you hear one, evaluate the trade for yourself to see if it's suitable for your risk, for the kind of stocks you want to trade. I'm basically not going to talk for the rest of the day until the final half an hour of the day at 3:30 Eastern Time. I come back on and I will discuss the action break strategy, which is for swing trading and position trading. I run some processes on my other computer using TradeStation, also on Stockscores.com. And if I see some good swing and position trading opportunities, I will highlight those symbols. I will show them to you on your screen that you see, and I'll give them a rating out of 10. 6, bit of a long shot, could work, but not a great pick. 7, good. I don't love it, but I think it's pretty good, and you should check it out for sure. 8s are the ones that I really like. I rarely give out a 9. I never give out a 10. And that's just because I don't want people to think that these are low-risk things. They're still risk. You still got to manage your risk. You have to realize that not everything's going to work. And what you want to do is have good risk management. That's how you make money over a large number of trades. Now, if you want to learn more about Active Live, go to this URL, stockscores.com/active-live-trading, or just go to the Stockscores website. Under Stockscores Analysis, you'll see a menu item there for Active Live. You can learn all about it and you can subscribe to it. But an important point is Active Live is only available to those who have taken my Active Trader course. So if you take the Active Trader course, you are eligible to subscribe to the Active Live service. It's $195 a month. Your first month is free when you've taken the Active Trader course. Now, what is the Active Trader course? Well, it's my strategies, my processes, support from me, access to my tools, access to my TradeStation indicators. There's all kinds of stuff. I'd rather you watch a video on that. Go to stockscores.com/trader training. You can learn all about the Active Trader course, how it works, and the cost and all that sort of thing. Well, that has been a fairly comprehensive but quick review of the Active Live service. Hopefully it's good for those that subscribe to it to understand how to use it best, but also informative for those who are considering taking the Active Trader course so that they can subscribe to Active Trader Live. If you have some questions, there is my email address. Follow me on Twitter, subscribe to the Stockscores YouTube channel, and most importantly, trade well.